The world whispers it in think tank papers, in closed-door meetings, in late-night strategy sessions. What if the United States and China go to war? The question feels unthinkable, yet every headline makes it harder to dismiss. Warships shadow each other in the South China Sea. Fighter jets come dangerously close in the skies over Taiwan. Sanctions cut deeper, rhetoric grows sharper, and every year, the distance between rivalry and conflict shrinks. For decades, globalization was built on the assumption that these two giants could compete without colliding. What happens if that assumption shatters? What happens if the two largest economies in the world trade not in goods and capital, but in missiles and blood? Stay with us, subscribe, because this scenario is no longer just fiction. It is the storm that financial markets quietly fear the most. At the center lies Taiwan, an island of 23 million people, a hub of democracy, a keystone of global technology. The semiconductor plants that dot its landscape are the beating heart of the digital age, producing chips that power everything from iPhones to fighter jets. To Beijing, Taiwan is not a partner, but a renegade province, a symbol of unfinished history. To Washington, Taiwan is not only an ally, but a linchpin of global supply chains and credibility. If Taiwan falls, what does it say about America's promise to protect its friends? If Taiwan is defended, what does it mean for China's dream of reunification? This is the tinderbox, and one spark could ignite the world. But Taiwan is not the only fault line. The South China Sea, rich in resources and vital for global trade, has become a chessboard of confrontation. China builds artificial islands, fortifies them with missiles and runways, and declares control over waters that carry trillions in commerce. The United States responds with freedom of navigation patrols, sending warships within miles of Chinese outposts. Each maneuver is described as routine, yet each comes with the risk of collision, miscalculation, escalation. How long before a near miss becomes a direct clash? And then there is technology, the invisible battlefield already ablaze. Washington cuts China off from advanced semiconductors, bans exports of key equipment, pressures allies to do the same. Beijing retaliates with export controls on rare earths, accelerates its drive for self-sufficiency, and warns that America is trying to strangle its rise. This economic war feeds the military one, turning factories into fortresses and trade routes into strategic assets. The global economy once bound them together. Now it sharpens the divide. The financial markets sense the danger. Investors pretend to believe in stability, but each new sanction, each new military drill, each new hostile speech sends tremors through currencies, bonds, equities. Traders understand that if the unthinkable becomes real, the consequences would dwarf anything since World War II. Imagine oil at $200 a barrel. Imagine shipping lanes closed across the Pacific. Imagine stock markets plunging, pension funds evaporating, inflation spiraling. What would remain of the global economy built over decades on the flow of goods between China's factories and America's consumers? The Pentagon speaks in terms of deterrence, Beijing in terms of inevitability. Each insists it does not seek war, but each prepares for it relentlessly. Aircraft carriers, hypersonic missiles, cyber armies, space weapons. The arsenal grows, the tension mounts. For now, it is still maneuvering, still signaling, still shadowboxing. But history shows how quickly shadowboxing can become real combat. The nightmare scenario is not only destruction, it is duration. A war between the US and China would not end in weeks or even months. It would drag on, grinding down economies, reshaping alliances, redrawing the global order. For decades, leaders said such a war could never happen because it would be too costly. Yet history teaches us that nations sometimes embrace ruin to avoid humiliation. Is that where we are headed? This is why we analyze, why we prepare, why we imagine the unthinkable. Because the unthinkable may soon be the unavoidable. And when that day comes, the world will need clarity more than ever. Subscribe and stay with us, because the next part of this story will show how war between the US and China would not only devastate the battlefield, but strangle the arteries of the global economy. If missiles ever fly between Washington and Beijing, the first explosions will not be heard on the battlefield, but in the arteries of the global economy. Trade, finance, and technology, the very systems that tied the two powers together for decades, would become weapons overnight. And the costs would be measured not in millions, not even in billions, but in trillions. Consider trade. China is the world's largest exporter, America its largest consumer. Container ships crisscross the Pacific, carrying everything from smartphones to machinery, clothing to chemicals. What happens if those ships stop? Sanctions, blockades, insurance bans. Suddenly, the supply chains that sustained globalization collapse. Shelves in American stores go empty, factories in China idle, ports from Los Angeles to Shanghai grind to a halt. The modern world is built on just-in-time logistics. In a war, just-in-time becomes nothing at all. Technology is even more volatile. The US has already begun severing China from advanced semiconductors, cutting off access to the most sophisticated chips and the machines that produce them. In war, this decoupling becomes absolute. American firms would be banned from selling to China, Taiwanese chipmakers forced to choose sides, Japanese and Dutch companies pressured to comply. Beijing would retaliate by weaponizing rare earth minerals, the essential elements for electronics, batteries, and weapons. Imagine a world where Silicon Valley cannot produce, where Tesla cannot build, where the Pentagon cannot replenish. The digital economy would seize like an engine without oil. Finance may prove the deadliest battlefield of all. The United States controls the dollar system, the network through which global trade and investment flow. Cutting China off from SWIFT, freezing assets, banning dollar transactions. These tools have been used against Russia, Iran, Venezuela. Against China, they would be nuclear in effect. But Beijing is not unarmed. It holds over $800 billion in U.S. treasuries. In a conflict, it could dump them, destabilizing bond markets, sending yields soaring, undermining confidence in the very foundation of American finance. Would China risk destroying its own savings? Perhaps not. But in war, rational calculations give way to survival. And then there is cyber. Every bank, every stock exchange, every payment system becomes a potential target. A well-timed attack could freeze ATMs, crash trading platforms, paralyze transactions. In a world where trillions move digitally every day, the battlefield is not only physical, but virtual. Who holds the advantage? Silicon Valley or Shenzhen? The NSA or China's cyber armies? No one truly knows, and that uncertainty terrifies markets more than bombs. Sanctions would expand far beyond direct trade. Allies would be forced to choose. Europe, dependent on Chinese imports but tied to American defense, would fracture under the pressure. India, seeking to balance between superpowers, would be pulled into the storm. Southeast Asia, the crossroads of supply chains, would become a battlefield of commerce. The global south, already squeezed by debt and inflation, would face shortages, defaults, famine. The war would not remain bilateral. It would cascade into a worldwide economic depression. Investors like to believe in resilience. They imagine that markets adapt, that crises pass, that profits return. But a US-China war would not be another crisis. It would be the dismantling of the very order on which global markets rest. For decades, the mantra was interdependence. Trade binds, finance stabilizes, technology unites. War would prove the opposite. Interdependence is vulnerability, and every tie becomes a weapon in the enemy's hand. The nightmare is not only collapse, but duration. Trade wars can last years, sanctions decades. Once the ties are cut, they are not easily repaired. Even if the shooting stopped, the mistrust would remain. Would companies ever again invest billions in factories in China? Would Beijing ever again rely on American consumers? Would Washington ever again trust China's supply of rare earths? The war might end on the battlefield, but the economic divorce would last a generation. So, as analysts run models of missiles and troop movements, the real question is this: can the global economy survive its two pillars turning against each other? Or would war between the US and China mark not only the end of an era, but the beginning of a new, darker one? Wars are not won only on battlefields. They are won or lost in the hidden balance between military capability and economic endurance. The United States and China both possess enormous arsenals, both boast advanced technology, both project confidence. Yet beneath the surface, vulnerabilities are everywhere. A war between them would be less about who strikes hardest first, and more about who can keep striking when the months drag on and the costs spiral. The military balance is complex. The United States commands a global network of bases, carrier strike groups, and alliances that stretch across oceans. China commands geography, the home field advantage of fighting near its own shores, where missiles and aircraft can fly short distances, and resupply is measured in hours, not weeks. The U.S. Navy is larger, more experienced, but stretched across the globe. The Chinese Navy, though newer, is already the world's largest by ship count, and it does not need to patrol the Atlantic or the Mediterranean. Its focus is narrow, brutal, precise. Dominate the waters around Taiwan and the South China Sea. Air power, cyber power, space power. Each domain carries its own risks. The United States has unmatched experience in coordinating large-scale operations, projecting force at distance, and integrating allies into its command structures. China has built formidable missile systems designed to deny the U.S. access to its own doorstep. American aircraft carriers are powerful symbols, but they are also large, vulnerable targets for swarms of Chinese missiles. If even one were sunk, the psychological shock would shake not only the U.S. military, but global markets. Could Washington sustain resolve under such a blow? Could Beijing? Yet even if battles are fought, wars are sustained by resources. Here, the vulnerabilities are glaring. China depends heavily on imported energy, oil and gas shipments from the Middle East and Africa that pass through choke points like the Strait of Malacca. In war, those shipments would be at risk. Could China fuel its economy, its navy, its air force, under blockade or disruption? America's shale revolution grants it energy independence, but allies in Asia would not be so fortunate. Japan, South Korea, and others rely on imports that conflict would imperil. Would Washington sacrifice their economies to strangle Beijing's? The United States has deep financial markets and reserve currency status. It can borrow and print in ways no other nation can. China has vast reserves, state control, and the capacity to mobilize society with authoritarian efficiency. Yet both face limits. The U.S. carries massive debt, and prolonged war would push deficits into uncharted territory. Would the dollar's dominance survive endless borrowing for missiles and ships? China's economy is slowing, burdened with property debt and demographic decline. Could it maintain wartime mobilization while its factories falter and its population ages? Manpower is another paradox. China's population is vast, its military recruitment pool enormous. The United States has fewer numbers but more experience in combat, logistics, and coordination. Modern wars, however, do not consume manpower as in the 20th century. They consume precision weapons, microchips, satellites, drones, and here lies the cruel irony. Both nations depend on supply chains that a war would destroy. Semiconductors from Taiwan, rare earths from China, machine tools from Germany, software from America. Who wins when both sides are cut off from the very components that make modern weapons work? Allies complicate the equation further. The United States would lean on Japan, South Korea, Australia, NATO. China would expect neutrality from Russia, at least tacit support in energy and weapons. But alliances bring risks. Would Tokyo risk devastation for Taiwan? Would Europeans stomach higher energy prices for a war in the Pacific? Would Russia exploit the chaos for its own gain? In global war, alliances are both multipliers and vulnerabilities. So who sustains a war better? America, with its global reach and financial dominance, but also its political divisions and public weary of foreign wars? Or China, with its vast population and authoritarian discipline, but also its dependence on imports and fragile economy? The answer may be that neither can sustain it, that the war itself would bleed both so heavily that victory becomes meaningless. And yet history warns us, nations do not always choose wars they can sustain. They choose wars they believe they cannot avoid. If Washington and Beijing ever cross the line, the test will not be of strategy alone, but of endurance. Who breaks first? Who blinks? Who pays? If the United States and China ever cross the threshold into open war, the shockwaves will not stop at the Pacific. They will roll outward, shaking capitals and markets from Brussels to Brasilia, from Riyadh to Johannesburg. Globalization, the fabric woven over decades of trade, finance, and technology, would unravel almost overnight. And the unraveling would not be temporary. It would mark the end of an era, the collapse of assumptions that defined the world since the Cold War. Allies would be forced to choose. Japan and South Korea, tied to American defense guarantees, would find themselves on the front line. Their cities, ports, and bases would become immediate targets, their economies frozen under the shadow of war. Australia, long a quiet beneficiary of trade with China and security from the United States, would be dragged into a conflict where neutrality is impossible. NATO, already strained by war in Europe, would face pressure to support Washington. But how much appetite does Europe have for a Pacific war while its own economies falter? Would Berlin and Paris risk their fragile industries, already dependent on Chinese demand, for a distant conflict? The alliance would be tested as never before. The global south would not escape. Nations in Africa, Asia, and Latin America, already struggling with debt and inflation, would face soaring food and energy prices. Shipping routes would be disrupted, container traffic rerouted, insurance premiums skyrocketing. The cost of basic goods would climb beyond reach, sparking unrest in fragile states. Governments would fall, protests would erupt, migration would surge. What begins as a clash between two giants would cascade into political earthquakes across the developing world. Markets would enter uncharted territory. Oil prices could soar beyond $200 per barrel if shipping lanes through the South China Sea are threatened. Global stock markets would plummet, wiping trillions from pensions and savings. Inflation would roar back as supply chains collapse, not from temporary lockdowns, as in the pandemic, but from permanent severance. The Made in China label that covers everything from electronics to clothing would vanish from shelves, replaced by shortages and spiraling prices. Investors would not talk of recession. They would talk of depression. Finance, too, would fracture. The dollar's supremacy would be tested as China accelerates efforts to build alternative payment systems with allies. Swift sanctions would splinter the global financial system into rival blocs. Multinationals would be forced to split operations, abandoning either the Chinese or American market. The great engine of corporate globalization, optimized for efficiency and profit, would seize up like a machine starved of oil. Diplomatic structures would collapse under the pressure. The United Nations, already paralyzed, would split along lines of allegiance. Trade organizations would be irrelevant in a world where trade itself is a weapon. Regional blocs like ASEAN would fracture under the impossible task of balancing survival between two titans. The idea of a rules-based order would disintegrate, replaced by raw power politics. And beyond the immediate chaos lies the long-term transformation. Even if the war ends, globalization will not return in its old form. Nations will seek self-sufficiency, companies will retreat into regional supply chains, alliances will harden into rival camps. The dream of a single interconnected world will be replaced by a divided, securitized globe. One where every trade deal carries the shadow of conflict, every investment is weighed against the risk of sanctions, every innovation is seen as a weapon. The cost will not only be financial, it will be human. Millions could die in combat, millions more in the famine and poverty triggered by collapsing trade. Generations would grow up under the shadow of scarcity, suspicion, and division. The optimism of the early 21st century, that technology and trade could bind the world together, would be buried beneath the rubble of mistrust. This is the nightmare scenario. Not just a war between the US and China, but the collapse of the world they built together, however uneasily, over 40 years. A collapse that would leave no nation untouched, no market unscarred, no citizen unaffected. And yet denial lingers. Leaders speak of deterrence, of stability, of managing rivalry responsibly. Markets cling to forecasts that assume trade flows remain. Investments continue. Globalization endures. But history whispers otherwise. Rivalries this deep, this existential, rarely stay frozen forever. One miscalculation, one accident, one decision in the wrong hour could tip the balance. That is why we must keep watching, keep analyzing, keep preparing. Because if the world's two giants collide, the consequences will define not just the 21st century, but centuries to come. Subscribe and follow this story with us, because clarity will be the only defense when the unthinkable becomes reality, and the world as we know it shatters.